There are further signs that inflation is easing up. Headline inflation in May eased to 6.3% from 6.8% in April. Now, food inflation is still stubbornly high, though, at 12%, but has come down from a record level in March of 14.4%. Another item on every South African's budget is fuel. Fuel inflation coming down to 3.5% from 5% in April. So let's get some reaction on this. I'm now joined by Annabel Bishop, chief economist at Investec. Annabel, thank you so much for your time and good morning to you. Good news for consumers?
Absolutely. And, the better than expected inflation outcome, the inflation rate came out at 6.3%, as you mentioned, and markets were expecting 6.5%, means that it supports our view that the Reserve Bank is unlikely to hike interest rates again this year. The South African Reserve Bank seeks to get inflation at the 4.5% midpoint of its inflation target range, and that's likely to occur next year within the inflation targeting framework. So I think, overall, it's a positive outcome today.
What would you say are some of the biggest contributors or the contributions to inflation, Annabel?
Well, that's, I think, the key point. There weren't really any. If we have a look at the CPI inflation outcome, it really only rose by 0.2% on the month. So There wasn't much from fuel prices. There was only a tiny 60 cents per litre petrol price increase in the month of May. Food price inflation actually dropped. It fell from 14.3% to 12%, another piece of good news. And, of course, as well, we did see that there was a little bit of price pressure coming through. Remember that 0.2% rise in the month I mentioned? One of those was from the entertainment sector. I think that they are still battling with some of the high price inflation that we've had earlier in the year. And then, of course, as well, we did see another 0.1% come through from the residual category. It's nothing other than a very small catch-all category for little inflation changes that don't really get, or price changes, if you will, that don't really get recorded in the other categories. So overall, it was actually a very subdued outcome.
Yeah. How would you also, I suppose, rate household spending in the past couple of months? What were most consumers spending on?
Well, I think, that's really the issue. Consumers are very financially constrained. And even though we say that there's not going to be any further interest rate hikes this year, from our forecast perspective, which obviously is a positive outcome, interest rates themselves are still extremely high. And, from that perspective, we're looking compared to where we were in 2020. So there's been a quick run up in interest rate hikes globally and domestically. And of course, that has placed consumers under pressure. That obviously places pressure on durable goods. And I think it's another reason why we saw a very subdued inflation outcome this month. It does, of course, show that the South African Reserve Bank's interest rate hike cycle has worked. And obviously, it'd be very appropriate for them to pause at least now where they are. But of course, as well, let's not forget that one of the reasons why inflation is coming down is because of high base effects a year ago, when obviously food prices were rising quite rapidly, and of course fuel prices as well. We've been through the impact on the global economy of the Russian-Ukraine war for quite a while now. But last year, this time, things were looking, quite significant in terms of the inflation outlook. There were quite a lot of worries about food availability and, of course, the impact on global prices there.
Yeah, and we can't talk about consumers and interest rates, Annabel, without referring to debt obligations. How are they faring there? Are they meeting their obligations in full?
Well, if we look at some of the institutions that look at debt, the Reserve Bank figures are a bit slow to come out. We don't have any, for the second quarter, for example, where we are now. But there's certainly been an indication, over the current interest rate hike cycle, which began in November 2021, that consumers are under substantially greater pressure from a debt perspective. There are a lot more going for debt relief, consumers obviously battling, excuse me, particularly in the mid to higher income range. And I think, that's quite an important point. Higher income earners are also feeling the pinch of high interest rates, but also, of course, as well, of the sharp slowdown of the economy. And part of that, of course, is due to load shedding. But also, of course, as well, we did have some weakness in the global economy and our commodity prices have been impacted. So fairly broad-based effects coming through.
Yeah, and also when you talk about, that global comparison, how would you then say the rand is, comparing and faring against, other currencies?
Well, I think, the good news here, or let's say another point of good news, is that the rand has come down from 20 rand to the US dollar earlier in the month. It's now, when I look at it at our Bloomberg screen, at about 18.30 to the US dollar. But interestingly, it actually came down to 17.85 on Friday last week. Of course, then there was some negativity coming through, both from global market sentiment and also, of course, as well, ideological factors. So idiosyncratic factors in South Africa. Part of that, of course, is a geopolitical risk. But I would say to you that the pullback in the rand is really important from an inflation and from a Reserve Bank interest rate perspective, because the Reserve Bank's looking for the rand to be weaker at about 18.68. That's the implied starting point for their quarterly projection model. And that model really gives an insight to the Reserve Bank about whether it should hike interest rates or cut them. So a lower rand, a stronger rand, obviously is positive for lower rates of inflation, and it's also positive as well for the Reserve Bank to keep interest rates on hold this year. And we do expect to see potentially some interest rate cuts next year.
Yeah, and of course, I'll leave it there, and I appreciate you speaking to us about this. Annabel Bishop, thank you so much for joining us, Investec Chief Economist, joining us right here on Newslinks. A bit of relief and some good news, of course, for consumers today, as, of course, we're seeing those numbers trickling in from Status Say.